Okay, grade 9s and 10s, let's take a look at 7 journals. We're going to exclude the general journal just for the grade 9 sake. First of all, I split it into two categories, just to make more sense. I've got a cash side and a credit side. So cash would be your CRJ, that first journal that you were taught where you were receiving money. So money was flowing into your business, cash. CPJ was the opposite of that, unhappy face. Money was flowing out, so you were making payments or you were spending money. And another journal that comes into the payment side is a petty cash journal, which I'll explain in more detail later. So you've got 3 journals here for cash. Then I go across to credit. What is the difference between the credit and the cash? So I've got 2 categories for the credit journals. I've got debtors and I've got creditors. Now, the big difference with credit is there's no cash involved. So you're going to make a note here that these people will pay later, the debtors. And in creditor's side, it would say, I will pay later. So the actual cash, let's just correct that. Okay, record after this. I will pay later. So the actual cash will happen a few days or a month after. Just be careful that the word debtor don't confuse you, as it is credit, because it refers to there's initially, just check if I spell this right, yes, no cash involved in these journals. The payments will happen later. So let's look at the cash journals. There was 3 of them, and we break it down a little bit more in detail. Who's involved here? Well, you've got customers, or if you'd like, you can call them clients. They buy products from you, or you pay them for a service, and you will issue them with a duplicate receipt because they've made a payment towards you. Or if you've got a cash register, you will give them a cash register slip and you will use the roll as your source document. Or you could look at the bank statement and you might see that a tenant has paid you for the month or the owner's increased his capital. So those are the cash receipts. If I go across to payments, who's involved here? Well, first of all, obviously suppliers, people that I pay for products, or people that I have an account with, say for example, municipality or MTN, some accounts that I have to pay. And the document here could be the EFT, or basically actually the bank statement shows that you did make these payments. So this is the outflow of the money, online payments. If you go across to petty cash, this is small payments that will be made, like you're buying flowers or milk, and it comes from a metal box that's normally sitting in the office or in the reception, and a petty cash voucher is issued by whoever is in charge of this box. And again, this is an outflow of money, even though it's small amounts. So there's your 3 cash journals. Easy. Going to the credit side, where it gets a little bit more complex, debtors and creditors. Now remember, debtors, these are my customers, people that come to me and they don't pay me straight away, they'll pay me later. I'm going to issue them with an invoice, which they'll get the original, and I'm going to keep the duplicate. Oh, okay, I'm going to issue these debtors with an invoice. I'll keep the duplicate and give them the original because they're the customer. And then in the perfect world, I'm going to give them 30 to 60 days to pay me. And then also keep in mind that there's a selling price as well as a cost price involved in this journal. So you need to know how to calculate both those prices. Then the debtor comes back. He's not happy. He's returning something, the color is wrong or the product's wrong, or you forgot to give them discounts, which you normally give them, so they're asking for an allowance. So this is the reverse of when they bought from you. Now you're going to give them a credit note. It's the opposite of the name. You're busy with debtors, you're going to give them a credit note because you're going to reverse the transaction. They're asking for a return or an allowance. They will issue you with a debit note, just for the record, because in your books, it's a credit, in their books, it's a debit. It's always the opposite. And then finally, just to close that off, you will have to be aware of the account called debtors allowances, which is an expense. It actually takes the place of sales. So just make sure you know what that looks like in the DAJ with the selling price. Going across to creditors, it actually becomes a little bit easier. So my creditors, we refer to them as our suppliers. So these are the people that provide me with my product that I'm selling. Now I'm the customer. So, oops, what happened there? So I'm the customer, so I will get the original invoice and they will keep the duplicate. I will ask for 60 to 90 days because I need some time to get the money from my debtors so I can pay the creditor. And then the good news is this journal looks like the CPJ, exactly the same, the format, except there's no bank account or bank column rather. There's a creditors control column in the place of bank. So just take note of that. Now I'm going back to the creditors and saying, oops, there was a mistake. I'm not happy. And we look at the CAJ. So there's a return or an allowance. It's basically when somebody makes a mistake, then you go to the AJ journals. So they need to give me some discount. So reverse is going to happen. Opposite of the name, a debit note. Debit note is involved because I need to do the opposite of the normal transaction. And they will issue me with a credit note if they agree and say, yes, okay, we'll give it to you. And basically, if you look at the format of the journal, it's the same as the CJ that you just did. It's just the reverse in the AOL or in the GL, where the transactions will be on the opposite sides. And that is it. That is your 4 credit journals and your 3 cash journals.